What's going on?
So can you do a couple of setups? Maybe like go through more examples of how to use this.
Yeah, I'm gonna do an extension example. I'll do a couple of those if you want. Yeah, actually, let me stream for a second.
All right, let me pass you.
Yeah, I hope this works.
I pass you the host.
All right, cool. All right.
Can you show how to fix the bars to the right? So you go to time axis and then you just go to expansion area. The screen is kind of blurry. Oh, we're good.
Let me get rid of all this crap. All right. Give me a second. Okay. You guys see my screen, right?
Yep.
All right, cool. It was a penny stock. Not a penny stock, but let's do GameStop. GameStop, actually.
169 tomorrow, baby. Let's go.
So something like this, for example, short squeeze happened, and people are like, "Yo, how this happen?" Right? So, the question always has to be asked. Where is the top, right? Because no matter what happens, there is going to be a point where things get rejected, right? So, for example, on this indicator, sorry, same concept. I'm just using a different platform as TradingView. So for the extension, what you guys want to do is just remember the formula for extension is going to be the start of the move. Then you want to go to the highest point, and then you kind of want to go down to where it retraces, right? So obviously we don't know what the highest point is on this big candle, so I'm going to ignore that. So I'm just going to kind of zoom in and look for where the move kind of started. So, sorry, that's just wrong. I'll do it again. There we go. So if I'm looking at that, this chart right here, the move didn't really start here because it came back down. So I would say probably this green candle, somewhere around here is where we started, right? So I can put my line up here. And then, these are daily candles. So this was Friday, this was Thursday, that was Wednesday. This was whatever day, right? So next time I'm watching, let's say I saw my first red candle or my first big red candle up here. So I can probably draw a line up here and say, okay, that's going to be my, that's going to be like where we hit the highest point. Then the retracement, it really came back down to somewhere around here or down here. So I put my line like somewhere around maybe this level over here, even up here. Let's say 33 looks good. You guys can kind of see this is kind of where this candle kind of bounced off of. So if that was my true retracement level, but this candle did kind of bounce up here. So I'm going to put it up here just to kind of keep the example as transparent as possible. So if we came down to this candle over here, you guys can see how we kind of bounced off a couple of dollars off this level. And then obviously this might look a little weird right now, but if you guys go on smaller time frames, like we were saying, hope you guys can clearly see how when these levels were broken, like I didn't plot this line anywhere, but this 236 level was kind of active as resistance, got a nice rejection right there. We had some rejection around this 382 level right here. And then the point halfway level right here. These are kind of golden ratio areas. I should probably change my colors, but once we did break this line, this is kind of a confirmation. We had a bit of pullback right here in the 15-minute. And then the second we broke that 618 level, we went straight to the moon, right? So that's that golden level we want to watch. As far as the top, I would have called the top maybe around 78. That's kind of hindsight. Honestly, I would have taken profits much sooner, but this kind of gives you a picture into where things are lining up, right? And, we found all these levels just by setting this line from the initial move down here, up here. And, this line was just where support was, right? So you guys can probably see how we're consolidating around all these levels. So, these numbers aren't just random, right? we spent a good deal of time between these two lines, and we had some nice consolidation right at that 100% level in the Fibonacci, right? So this is like the first Fibonacci cycle, and that's where we have the most consolidation. So when you guys are trading, all you guys see is support and resistance. You guys are probably like trying to go back and look at the weekly charts to find the last time GameStop was at this level. But sometimes it might just be best to just use mathematics and use these levels to find where your next trade is going to be. We bounced right at that 236 line. This is also another important bounce point. I'm going to post these numbers in the chat. These numbers are very specific. I'm not going to get into the mathematics of it. If you guys that's not really important right now, but there are reasons we chose these specific numbers, and there are very good reasons why 618 and 1.618 are the most important lines to watch. And then we have these other important bounce points, right? So that's kind of the application of Fibonacci. I can show an example of a trade that hasn't happened yet, and we can kind of see the progress in it. So I just found AMC. What was that?
That one is a great one.
Yeah, AMC. So just looking at this a couple ways, just looking at this chart, I don't really see much information, right? So first thing I'm looking for is I want to find breakout, right? So if it's looking at a chart like this, I can't see anything, right? And you guys might be confused asking where we're getting all these lines from, right? So the first thing we want to do, if you guys can't find anything, you guys want to go on bigger time frames until you find something, right? So now I kind of see a retracement, right? And I kind of see something that looks interesting, right? So on the hourly, that's where I found what I was looking for. So like I said, right, we want to look for the start of the move and then the retracement. So there's two retracements here, actually. There's one from here up to here, and then we retraced down here, and then we broke out and up there, right? And the second one I was looking at is we're starting right here. The move started up here. We went all the way up here, and we retraced down to this level, right? And I say that because this is where we had that nice hammer candle, and we had the reversal. So this was the true retracement. So I'm going to draw both of these levels, and we're going to see how they panned out, right? So the first one is this. Let's see. You go pull up your extension tool. This line. This move really starting down here. So draw up there, and the retracement was down to here, right? So this actually did end up working out. So it might look like a mess to you guys right now, especially since things do get a little weird as you have further extensions. But it actually did work pretty well around here. So remember that 1.618 line is what we're watching. That's our golden ratio line. So when we did break that level, we did have a lot of volume right there. So it looks a little weird right now, but if you do go in smaller time frames, you might be able to see that consolidation around that line. So you guys see that rejection around that one. This is the blue 1.618 level. So over here, that's where we kind of have the consolidation. We went above it, we rejected it. So we had no green candles up here, so you probably wouldn't want to get in that trade there. But then over here, this morning star pattern, this is probably the area you might want to consider getting a trade with that increasing volume as well, right? And then a clean break above that 1.618 level will give you a pretty nice entry. As far as targets go, I don't like using Fibonacci targets once you do break these crucial levels. Your target's going to be your next supply zone or support and resistance at that point. So obviously the 2.618 was our second level we rejected pretty hard. We couldn't really clear it with confidence here. We tried to break out here and got shot back down. Tried for it, rejected. This didn't really touch it as much. I'm not going to count that. But then over here, we had that perfect consolidation, and we did go for a breakout right around this level, right? So it's not perfect, but it does give a pretty good picture, right? And this is the second cycle of our golden ratio, right? The 2.618 line, right? And then 3.618 is the next line. Again, I didn't draw all those lines in between because at this point, I consider the trade complete. And the further you go, the more ambiguous it gets. but this is kind of how you can make your own trades with the Fibonacci lines. And here's going to be the second example I was talking about. So let's go back on the hourly, and let's try and catch a start of the move, which was, sorry, around here. Let's say this candle around there. So the top was really up here, and then the bottom is right around there, right? And like I said before, I'm using this hammer candle as a reference point because that's where the true reversal happened, right? So right there, right on that line, and then go on smaller time frames again. And we have a lot of consolidation around that 618 level. You know, this kind of acting as resistance, bounced off there, bounced off, then was able to break out here and it rejected the 7.86 level, which is another one of those golden ratio zones. So I would bet the next rejection point is going to be up here at 3.96. That's going to be my next target, right? And then I'll be looking at a bounce off consolidation in these boxes anywhere around there. So I'm just using these zones as support and resistance. Oh, sorry, in conjunction with support and resistance to form these targets, right? And once we do get past this 1.618 level, I'll be using solely support and resistance from prior price action, right? I'm not going to be using fib lines the whole time, but this kind of gives a pretty good idea. And the reason I show you this, I'm just trying to show you guys how accurate these fib lines are. You know, started the move, I went to the high of the candle, went to the bottom here, and you know, the trade seemed to work out. So I'm going to leave these lines up here, and we're going to see how things pan out. In the morning, I'll be looking for a breakout of that 786 level, going straight to 3.96, and possibly looking for a strong rejection around this area. So this box is going until February. I'm just going to drag it to the 19th, just because that is pretty popular expiration date on the options. So I think I'll land a bit higher. Sorry. There you go. That wick right there. Is this making sense, guys? I know I'm doing a lot of talking, but I do want to check in with you guys just to make sure you guys are following. Any questions? Check the chat real quick. Just want to understand, these things give you automatic support and resistance. Yeah, think about it as these hard levels, a lot of zones that you can watch to just enter trades and exit trades. You guys good? If you guys want another example, I can let Casa host again. I know most of you use Thinkorswim, but this is the platform I use mainly for charting. So
before you jump off, when you started this, you went from that low, and what candle did you go to the high? That very long red one?
I was looking at the hourly. So I went to the high of this. I went to the upper wick of this red candle.
The big red candle.
Yeah.
Okay.
So like that. Sorry.
Okay.
Yeah. This is right at this wick right here. That's what I'm watching. That was like the rejection, right? So I wanted to see if I could get a trade based off those lines. And you know, I used this hammer candle right here. This was the reversal point, and we had a huge breakout right there. So at that point, that's where I'm going to start drawing my lines to see where my targets are. And first target's going to be that 618, then 7.6, then up here, and then 618, right? If you guys want to get into numbers and just take a bit of notes, I'm going to go over this pretty quickly. This is just something I've learned in my experience of trading, but again, not everyone has to follow it. You know, everyone has their own strategies, so take it with a grain of salt. But I find that whenever we break these golden ratio zones, we usually tend to break up pretty aggressively. And once you do get past this one level, we tend to go straight to the 618 level. I always usually see a pretty hard rejection up here. And then yeah, a lot of consolidations around this point. And then as far as bounce points, if we form like a bull flag here or a bear flag and we fall out of it and it fails, then I usually look for a bounce at the 1.236 level and the 1.382 level. If you guys are in TOS or whatever you guys are looking at, I'm sure when you go to your settings, you're going to see all these lines right here. These are the lines I personally use. Anything above 2.618, I don't really use, honestly. And our Cosmo was saying he doesn't really use anything above 1 for retracements and anything above 2 for the extensions. So again, don't stress yourselves out trying to find every Fibonacci level. You know, like I said, the most important things to watch are those 618 lines and anything around that. The 1.236 and 382, those are usually bounce points, right? So if I did like a, let's hold up. Second prediction, there you go, the ghost prediction. Just to give you guys an example, right?
They need that. They need that in TOS, ghost prediction.
Oh, they don't have it? No way.
Nope, they don't.
So yeah, they need that shit. Where'd it go?
Oh, it replaced.
Stupid. Let's do it again. All right, so what I was saying is if you get like a breakout up here, it's fucking up. Sorry guys. Let's do this one more time. I just want to show you the levels while I'm doing it so you guys don't get confused. All right. So if we break out this 786 level, I'm going to look to go to 1 and probably bounce around here, then go back here, consolidate a little bit, and then probably break all the way up to the 618 level. And then I'm looking for either a bounce around here, and then down here, and then you might just go straight up to the 7.8 or just maybe consolidate here again, and then try and break out, right? So all this I'm showing you, like these look like random lines, but this is really how price action tends to work. Whenever we go over Elliott wave theory at some point in the future, when you get more advanced, I can kind of give you an idea of why I'm looking at these lines. But just be aware of the golden ratio lines and just understand that the 618 levels are the most important, right, to watch, especially that 1.618 level for the extensions. So, like I said, it's going to be in a video. So 1.236 and 382 are good bounce points. 618 golden ratio. 786 also a good breakout line. And to count, of course, the 100% ratio, the 1 and the 2, those are going to be pretty good rejection zones as well. So always be aware of that in your trading. Sometimes you guys are trading a breakout and you might get caught in a false breakout where you think it's going to go and fill a gap, and then all of a sudden it gets slapped back down. You guys might want to look at your fib lines to confirm why that happened, right? Nothing is random in the market unless it's just news that happens. And even with news, you guys can get a good idea of when things are going to retrace or where things are going to retrace to, right? So that's kind of a pretty good insight into where these magic lines come from. Don't stress yourselves out too much about it. Don't try and learn every single number or memorize them. Just use it as a tool to help with your trading, and just understand that this is what all these trading bots and algorithms are programmed to follow, which is why it works so well. So I think that's all I have for Fibonacci. One more tip I have is that if you guys are trading a stock and all of a sudden news breaks, so I'm trying to think of a stock that had news the other day. Shit.
Check out I think Penn. I think Penn had a breakout on news.
I want a gap down, honestly. Look for a gap down.
What about
CRM?
Intel, whatever?
Intel, that's a good example.
Oh yeah,
That's what I'm
Intel.
looking for.
Damn earnings and fake news.
It's so funny. This actually might just go straight back down to
Gap fill.
This stock is such a joke. Yeah, it's not a good example. What I'm looking for is something that just had. Okay, I actually have a good
Check beyond. Check beyond.
Yeah,
Check beyond.
yeah, exactly. That was such a weird day. Yeah, this candle was so weird. It's 9th of November. Okay. Here's what I'm looking for. Okay. So go to November 9th. So yeah, what happened here was that actually I want regular candles. What happened? Oh, shit. Cool. So yeah, for example, if you guys are trading, so if you guys just want a quick refresher, what happened here was that Beyond was trading normally, and then all of a sudden McDonald's said they're going to use plant-based products and make their own. So Beyond gapped down. Then a couple hours later, McDonald's was like, "Oh, never mind. We're actually using Beyond Patty." So the stock went back up. Then they had earnings the same day, and then just tanked after. So if you guys are trading and you guys see random crap like this, you guys can throw on quick Fibonacci lines. These lines also work in reverse, by the way. So what I mean by that is you can think of it as the start of the move, and then this is the low, that wick right there, and then this candle right there is going to be the retracement, right? So what happened here, I know the lines are on the chart, a little hard to see. Actually, maybe I can get rid of the drawings quick. I don't remember how to do it right now. But basically what I'm trying to show you guys is that right here, if you guys zoom in, we were trading normally, then this candle gapped down on the bad news, went down to here, and then spikes up. So you guys always know that when you guys see bad news, price always gaps down, then spikes up a little bit. Once buyers recover, then it might retrace a little bit more, right? So what ended up happening was that the price went down and then it retraced, it broke support right here. So the next lines to watch were, you know, the 0.5, 0.618, 0.76. These are the gold, that's the golden ratio zone, right? We ended up finding support here and we're able to finally reverse the trade. And then, you know, we did gap back up. This is not really a Fibonacci thing, but, you know, bouncing off these levels would have been a great trade right there to find support. And, you know, if we kept falling below, the next line I'll be watching is 139.8 line, and then finally down here, and maybe down here for a big bounce. Obviously, this was manipulation based off the news, but that's also another good strategy to find these levels, right? And I think that's actually how I might have charted this line, or I might have used an upper line before. I don't remember, but you guys do want to use Fibonacci lines when you have random news break all the time. It also works on the upside. If you have a penny stock that goes up for no reason, or like recently EXPR did something pretty similar.
Yeah, baby.
What does it do? Yeah, so something like this, for example. Yeah, so that's some weird shit. It wasn't really a retracement. So there's two ways to do this. Like I said, you guys can do the start of the move. It's the high retracement up here. Switch the candles for a second. All right, go down a little bit on those. All right. Sorry. And the high of this candle was, yeah, right around there. So bounce right there. So the next thing I'm watching is sorry. Yeah, we did yeah, we're bouncing around at that 0.5 level again. So if we don't bounce right here, we'll see what happens. I don't have extended hours on this. I actually know it's actually went past $2 in the after hours, so this might be relevant right now.
Yeah.
It actually might be better to just draw this up here and then call this a retracement. That's where we closed after hours. So again, I'm going to leave this chart up here, and we're going to see how it reacts in the morning. So 1.79. Oh, just extend that, right? So we'll see how these levels react in the morning. So right now it's going to look a bit weird, but as you guys, we're going to see how these lines are respected, and we'll see how successful it is, right? So that's kind of all I wanted to say about that. I know I'm doing a lot of talking, but I think the concept you guys should all get familiar with. That's really all I have to say. So if you have questions, put it in the chat. I'll try and answer it. If you guys want to see anything on TOS, I'm gonna give the host back to Casa to show you any things that you might want to see.
Yeah, Nubian asked, can we explain what a short squeeze is?
Short squeezes?
Yeah.
Yeah, sure. Does anyone have any questions about the fib lines before I get to that? To ask it now before I get to a short squeeze.
By the way, we got 10 minutes left.
All right, anyone? Nope. So short squeeze occurs, it's basically the concept in which, all right, cool. Yeah, it's a concept in which stock prices will start to skyrocket and very quickly because of a lot of buying pressure from the market. So what basically happens is that basically, if you want to understand a short squeeze, you have to understand like what shorting stock means. So on a very basic level, you're basically borrowing shares from your broker, and you are hoping to, you're basically selling those shares short. So you're basically selling those shares to other people, and then your hope is that the price will go down in the near future. And if that price goes down, you want to buy back those shares. So that's why, when you're going short on a position, you might say sell to open. You're selling to open a position, and then buy to close is to get your position back. So if you short a stock that's trading at $40 and then it goes down to $20, you can short it at 40. If you buy it back at 20, you can pocket the difference, right? So you make $20 if you get a 50% drop. But if you short a stock that's trading at $40 and then it goes to $50, you lose $10, right? But that stock price can keep going up. So what you have to do is you need to buy that share back at that price. So remember, you don't own the shares that you sell short. You're basically borrowing it from your broker and you're selling it to somebody else with the hope it's going to go down. But if it doesn't go down for whatever reason, then at some point you're going to have to buy those shares back. And every second you wait to buy those shares back, you actually lose more money. So what ends up happening in a short squeeze is that whenever good news drops on a heavily shorted stock, or if it gaps up, what ends up happening is that it'll start running a lot more than normal because all these traders who have shorted the stock need to start buying those shares back, right? And when a trader's looking at their account and they see the shorted position and they see the stock skyrocketing, they're going to start buying as many shares back as possible. So when people are buying back shares, in addition to all the traders who are actually just bullish on the stock, you basically have double the buying pressure. And the faster the price goes up, the more shorts you're getting squeezed out, which is why we call it a short squeeze. And there's always going to be a top, but that usually accounts for some really, really big price moves. So that's exactly what happened to GameStop the other day, right? Yep. That board of directors from Chewy stepped on, and that was all we needed. Is with Wall Street bets, that's all I needed, and then it just started skyrocketing. And then all of us shorts have to cover their positions, right? Because they lose more money the higher it goes. And of course, some brokers will just sell you out because if you think about it, short selling has unlimited loss because the stock price can theoretically go to infinity. So you guys don't want to get caught in that. And people don't want to get caught in margin shorting stock that they're going to lose money on. So that's kind of how it happens. As far as prediction goes, GameStop, I mean, in hindsight, that was more or less an obvious one. But the entry is a bit difficult on that, which is why we do stress using fib lines to kind of find your tops and everything. So it actually ties into this class. But as far as finding things that will have a short squeeze, you need to basically hope for a good catalyst because any heavily shorted stock is heavily shorted for a reason, right? So things like this happened all the time with Tesla. Tesla was at one point the most shorted stock on the market. I think they recently lost that title, but that's why it ran so much every day because everyone was trying to short it every single day. And that's why I was able to just, gain billions of dollars in market cap every single day because every day billions of dollars were getting lost by these hedge funds. And you see always articles about Elon Musk laughing at these hedge fund managers losing, $800 billion or whatever it is. So to predict a short squeeze though, you have to look at two main components. You guys want to look at the short interest on a stock, and you guys want to look at the short float. So what that basically means is the short interest is a percentage of shares of stock that is like being sold short, and then the short interest is basically a ratio that shows you the amount of stock being sold short compared to the float of a stock, right? So you guys have to remember that float of a stock is the amount of free shares in the market, right? So not every share in the market is being owned. There's outstanding waiting to be bought to increase value. So the short interest and the short float, whenever those get higher on the stock and that stock has a good catalyst, then there's a pretty strong chance you're going to have a very strong run up. And of course, the more people that are buying into it, the faster the price goes up. The more shorts that get squeezed out, the faster the price will go up. And the faster the price goes up, the more greedy people get and the more shares people buy. And that's the definition of a short squeeze. So you guys can go online, look at the most shorted stocks right now. And that's how you kind of find things that might be next. I can tell you off the top of my head that AMC and Fubo are on that list right now. They do have a very, very high short interest, and they don't have that many shares in their float, which means that it's very possible for that price to be driven up. So, just for reference, GameStop had 55 million short shares that were being sold short, that were outstanding. AMC has around the same, and I think Fubo also has around the same, which is why people are talking about those two in particular, because of the similarities to GameStop. So just be on the lookout for that. If you guys can catch a short squeeze, that can print 10,000% on your contracts. But that's a little off topic.
What stocks you said that had all that action for the short squeeze? You said AMC. What else?
AMC, Fubo. I have a list. I'll send it in the prior to mentorship chat. Space is one of them. Virgin Galactic, Bed Bath & Beyond. Thing about Bed Bath & Beyond is that they have a lot of shares. They have almost double the float of the other shares. So basically, it would have moved half the speed of GameStop on Friday if it had a similar buying pressure. So I do have a chart I can show you guys. Let me see, what else you guys trade? Oh yeah, SunPower Corporation. It's penny stock people are trying to do. That's also heavily shorted. National Beverage Corporation, which is Fizz. Clovis is one of them. GSX, a Chinese company. And there's one more. Rocket Companies. There's another one of those.
We're running out of time right here.
Yeah. So
2 minutes.
yeah, that's all I got. Just answering questions. Yeah. All right. Well, if you guys are good, I'm going to step off of this and get back to futures. But
All right, thank you.
yep, no problem. Hope you guys learned something. If you have any questions, ask in the chat. I'll get to you as soon as possible. Yep. Good night.
See you
See you
guys.
tomorrow.